On the market, pushed sterling up about 1 cent, above 152. The 10-year yield up 5 basis points. Short-end yields up, then straight back down again. Do you think the market's got it just about right?
Yeah, probably. I mean, it clearly came as a surprise to the market that not so much Mark Carney. I think we certainly didn't expect him to vote for QE on meeting one, but that Paul Fisher and David Miles had backed off their call for QE was a surprise. It clearly reduces the chances to a degree of more QE in due course, and higher gilt yields therefore makes sense, as does a slightly stronger pound. Yeah.
Higher gilt yields, you say. I presume you're referring to the long end, because the bank seems pretty determined to keep the short end low.
Yeah, I mean, that was certainly the message that came out. In fact, they were very explicit about it. They said longer yields will tend to follow US Treasuries, which obviously have been selling off over the past couple of months. And with the prospect of any QE being dampened, that does leave the long end pretty vulnerable. But at the front end, you know, they made the point, they're still talking about additional stimulus. They stressed again that the sell-off that we've seen in the US shouldn't, at the front end, translate into a sell-off here, because the UK's economic prospects, as they see them, are essentially unchanged from May. So, you know, the front end does look pretty well protected, and of course we're all anticipating some form of guidance being introduced as well, which should pin yields at pretty low levels at the front end.
What sort of level for the 2-year yield do you think will start to rattle the MPC members? Because in the last few weeks we went from 30 basis points up to 60, and that seemed to get them startled. Yeah,
and you know, we had a statement 2 weeks ago at the time of the meeting, essentially to take some of the heat out of that rise in short yields. We've seen them retrace a lot of the way back where they came from, but not all the way, and we think that the MPC will be pretty determined to, if they can, push them even lower after the recent decline from the spike, and if not, then certainly make sure that they don't push higher again until the MPC feels that conditions at home warrant that.
It's quite incredible, really. 2-year money is about 20 basis points cheaper than overnight cash.
Yeah, well, you know, there is still a lot of risks out there in the wider world, and therefore a lot of money looking for safe havens. And ultimately, you know, we've seen in other markets anyway, certainly in Germany and the US, for example, short-dated sovereign debt get to negative yields. Clearly, there's no particular sense in that happening, or indeed, as you say, to have short-term gilt yields below bank rate, but people need to put their money into something physical. Overseas investors, central banks and so on want the return of their principal before they're worried about return, and therefore there is still money going into these instruments that look very expensive on the surface.
Okay, so you think the curve is going to steepen. What sort of targets are we talking about here?
Well, you know, as I say, I think the front end has retraced most of that sell-off. It's probably going to be anchored around here. We do think short yields can come off another, you know, 10, 15 basis points, frankly, depending on what sort of guidance we get. At the longer end, we're probably bearish to the same extent. So it suggests to us that 2s, 10s might steepen up another 20, 25 basis points or so from here.
And if the short end is and does remain anchored, I presume you think sterling's drifting lower? Are we going to go back below 150 against the US dollar?
Yeah, we think so. I mean, that, to be honest, is as much a story of US dollar strength as sterling weakness. The US does look like it's on firmer ground now. It looks like it's heading pretty imminently towards tapering of QE, and if the data holds up in the face of that, then we think the dollar can firm against all of its you know, major currencies, including sterling. So probably back below 150 in due course, and you know, maybe towards the lows we had recently around 148.